What's up, everybody? Today we're going to be talking about Meta platforms. They own Instagram, Facebook, WhatsApp, Reality Labs, so on and so forth, Oculus. We're going to be talking about the trade setup that I see with this name. This is a high five setup, my personal trading strategy. So let's get into it. So with the high five setup, essentially what we are looking for is a charting pattern. As you can see right here, we have an ascending triangle pattern. We had a breakout. We have this almost of a retest. It might be good enough, honestly. They might have front ran the retest, as we did get right here on the 9 EMA, and we bounced nicely off that. Made a higher low right here and are continuing higher. So first up on the high five is going to be a charting pattern with a breakout. Getting in on the breakout, taking some profits, getting into it more on the retest, confirmation higher, and we move. Second is going to be a volume gap, with a volume shelf. So we had this nice volume shelf down here. We had this move up into this next volume shelf through this gap right here, as you can see. And now we are sitting at this next volume shelf here with endless room to run, essentially, because we are right at all-time highs above this volume gap here, in this above this volume shelf here. We are at all-time highs when we get up here, so the stock it really doesn't have a defined resistance point yet on that. Before we get into the other three indicators that we look at with the high five setup, I just want to talk about the measured moves. And the measured moves are essentially to 705, we'll just call it 706, and our next measured move is 780. So our price targets are going to be 706 and 780, with a very short-term price target of about, let's just call it 600. I think it gets back to 600 pretty quickly and pretty easily. It's just right there at its all-time highs, basically. And we're already, $13 and some change or whatever off, $12 and some change. So these are going to be our profit targets. The way I would play this name is probably getting 50% of my position in now, putting my stop loss below the 21 moving average, alongside below um, the resistance turned into support of the ascending triangle, placing it below there and putting my profit target for a 2-to-1 up to about 706, as we can see there. And like I said, I would do 50%. And that way, if it comes down here and it does fully retest, well, then you add the other 50%, and then you'll be in basically right here at this volume shelf. And you'll be looking really well for the little bit of a longer term trade, since this is a weekly chart. The measured move on this is going to be from down here to the breakout, so about 287 days. And when I say these measured timelines, when I say these measured timelines, it doesn't mean that it's going to take till June of 2025 to get to the $780 price target. It can surely move a lot faster than that. It's just you want to have some sort of a timeline that you can follow when you're looking at these types of things. You know what I mean? Because if you just sit there and say, oh my God, look at these price targets. Like, you can't just have price targets without a designated time period. And where do you get the time period? You're just going to make it up out of thin air? No, you have to get the time period from something. So you have to look back at the moves that it's made and say, if it took this long to make this ascending triangle, then it might take that long to get to our profit target of 43%, almost 43% higher. But that's why you have other profit targets along the way to take some profits, right? And another thing you could do that I like to do, and this is like another little trade secret, is, let's say I get in right here. Let's say I get in right here, and then we do get that I get in 50% here, and then we have that pullback down here. I had my next 50%. That gives me a cost basis probably right about there at about $557 per share. And we'll be down, as long as we don't crack this 21 EMA, we'll be at about 3% down or so. But we're holding strong because our high five setup's telling us that we're good and we're going to go higher, right? We already did the hardest part. We did the breakout. Now we just need to retest and then continue higher. So with coming in and adding or getting into a position here, 50% and then another 50% down here, what I would do is if that does happen, you do 50 here and 50 down here, basically closer to 21 EMA in the retest. So we do get that retest. At that point, when we do get back up to this high right here at $600, I would sell your specific shares that you bought higher. I hope that makes sense, everybody. You're essentially going to only sell out of the 50% of shares that you bought right here, or maybe even half of those shares you can sell out of, right? Take profits on half of those shares, because then you're going to bring down your cost basis even more to say like down here, right? So you either sell out of all of those or you sell out of 50% of the 50% position you started. I hope this is tracking. And then essentially you're going to drive down your cost basis for the trade, and then you have much more wiggle room, right, for the trade. And then once you get up here to your price target, then essentially you take out half your position, you lock in those profits, and then you say maybe once you get up there, you set another stop loss. Whatever you guys want to do, right? If you want to do a 2-to-1 stop loss to make sure you lock in all those gains and make sure it doesn't go below that, cool. If you want to draw, a break even because it's going to get here before it gets back down here, cool. Like to each his own. Everybody's got to trade their own book. I'm just giving you guys the setup and what I'm thinking and what I do on my trades. So we kind of talked about the trade. We kind of skipped over the other 3 indicators, but we can get into that now. Sorry about that. I kind of squirreled there for a little bit, but it's all important, right? It's all mixed up, but it's all important and it all matters, right? How you trade, how you pick out your profit targets, all that stuff. So we have 1, 2, and now we get into our 3, 4, 5 of our high five setup. 3 is going to be our MACD. We are blue over orange in a bullish trajectory. We are rising higher. We are already above the 0 line and continuing higher. We had a pullback on the MACD, which is like just some consolidation in here. And now we have a chance, I believe, to run higher back up to these highs on the MACD. So 3, MACD confirmed bullish. 4 is going to be the RSI making higher lows, while purple over yellow, bullish indicator, and not super in the overbought area. We're good there. We're at about 64. So we have plenty of room to run up here into the overbought area with this trade. And then finally is going to be our trend, which our trend is not red over yellow, but it's in our consolidation box that we always talk about. The thing is, once we get up here with a company, with a stock, when we get up here, red over yellow, and we get over this 80 line, that first pullback is going to be our support for the trade that if we were already in that trade, that would have been our support. Or obviously now it's going to be our support. That way, if it breaks down beneath this and then another indicator tells us exit, we will exit, right? So we come up here and then we can kind of just go sideways in here while the stock continues to go higher, right? This doesn't mean that just because we are crossing down that it is negative and we're about to crash down here. Not at all. This trend and the Williams R are the 2 indicators here that can basically just go sideways as the stock price continues higher. So we have our high five set up. Some people might be like, well, what about that? Like, I'm not worried about that because as you can see right here, it's still a higher high, right? We had this little bit of a pullback here, and I believe that we're about to pop over that like we're getting close to doing, and we'll continue to run. Everything else is pointing in our direction. If we do have a little bit more of a pullback, like I said, it's going to be down here to the retest area and the 21 EMA. and then we'll probably still most likely be in this box here, and then we'll turn upwards and then continue sideways. Now, if it breaks this box, right, and then we break our box up here on our consolidation boxes, if we break those, then yeah, I mean, I'll exit and that'll be that, right? But everything's looking good. You have to take in all things into consideration and understanding that Meta has ran a lot this year. And honestly, the past 2 years, it's ran a lot from whenever it was down at 80, which was a massive buying opportunity. I love getting some shares at 80 in my long-term portfolio. That was that was stealing money, honestly. But um, understanding that it's already ran a lot, but it doesn't mean it's over, right? Let's look back at history. We have this box created here. Look how long it ran. It ran for, you know, a year. Ran for a year. This one back here, right? Once it crossed up, it made it slow and never crossed that low from February 2023 all the way to, August 2023. So it can run for a while. And then as we see, when we start that process here, we run up until there, and then we didn't even crash, right? So it just had a pullback, but that's your exit. That's your that's where you're going to exit out of that position because it's telling you to, right? That up here on the RSI, up here on the MACD, it tells you to exit, you exit. I get that it just had a pullback and then it moved higher, but that's not the game we're playing. We're playing a trading game here. If there's long term, then you just hold and then it keeps going higher, right? But in the trading game, you're gonna hold it until your indicators in the high five setup goes against you, and then you exit. Right? That's it. Um, so we see it there, and then we also see it here. Once we got up into here, we ran and ran and ran, and this one was a much harder pullback once it fell out of there. Right? So you guys see it in front of you. And yeah, so like I said, you got to take everything in consideration. We made this low. We have our consolidation box. If we fall out of that, we know it's probably time to exit the trade. That coupled with one of these other indicators telling us to exit the trade, and that's what we'll do. But I still see plenty of room to run on Meta on a fundamental standpoint, but also on a um, high five standpoint as well. So we have a high five setup. Bonus, like I usually talk about, is your Williams R percentage, which helps you in guiding you into where, if it's time to get out of a trade, this is the first indicator you look at, or if it's time to get into a trade after a bottom, this is the first indicator you look at. And if I really need to tell you why, let's just look back at history. I told you Meta at 80 some dollars a share was a steal, right? So if we look back at this history, we go back here and we had this is a pretty massive consolidation actually. Wow. Um yeah, usually the consolidations aren't this big and they don't usually break over 80, but you have to take every stock for what it is. So um but nevertheless it's still told you, right? So if we look here, let's close this other stuff out. If we look here, we had this massive consolidation, and we were just kind of bouncing back and forth as we went sideways. We did break up above our high a couple times, and they're just little pullbacks here, little pullbacks, and then further down, and then a big fall down here to here, and then essentially what our Williams R told us right here is that okay, we're coming out, made a higher high, and then we continued higher, and then higher, and we broke out of that consolidation box. Now I know that consolidation box was high. Let's just take it as it is. The consolidation box was at 43.88. We had this high right here at about, let's see, we broke out of that, pulled back, retested that resistance area. So we broke it, just like charts. We broke it, we retested it at 44.75, and then we continued higher. Well, let's just draw a line down from where we did that. We broke out, retested it, and then continued higher. Oh no, we didn't get in right here at $80. Oh my God, we missed out. We missed out. Did you honestly miss out? Or did the Williams R tell you right here on the week of 19 December that, hey guy, we're done selling this company off. We're done selling this company off. It's time to run. And you would have got in between 132 and to $110. So imagine getting Meta still for below $130 per share. It's okay to be a little late sometimes. You just got to look at all the indicators and the high five setup and your strategy and let it work for you. Because then we ran up here. We had our first pullback, so we could have created our box here. So let's see how much gains we would have made. So we created our box there. Have our consolidation box here. We had our support set at $32 or $32.11. Went higher and higher and higher. And then we didn't break that support. So we got up there, could have entered in December 19, 2022. And then we could have exited in August 2023 for a gain of, let's see, let's just say we get in the middle. Let's just say we get in like $120.43. And then we want to exit until around here. So we would have made 169, let's just call it 170, a buck 70, 170% on this trade. 170% on this trade in not even a year. Not even a year. We're talking like 6-7 months. 170%. And this is why trading is so awesome. And also, you just had the fundamentals and the company beaten down. If you looked into it at all, you realize like this is not but deserved to be down here. They are the social media platform of the world. Okay. So let's move back to present day, right? Also, let me show you this. Not that one. This one. Look at that. Like I said, just because we're up here in the overextended area, we still ran for 170%. That's what I'm saying. I'm only saying this because I don't want anybody in the comments being like, oh, well, it's not a high five technically because you don't have red over yellow. Yes, I understand that, but you have to take in all this stuff into consideration. And we have our consolidation box formed. We have our support. We have our Williams R box consolidation box formed. We have our support. We have a breakout. We have almost of a retest. We have a volume shelf. MACD's bullish. RSI's bullish. Solid trade here. Solid trade. I'm in this name big time in my long-term portfolio for the fundamentals. But at the same time, yeah, actually I got it right here. So we can pull it up and we got Meta. It's a 5 of 6 score on the valuation analyzer. As we can see here, this is our discounted, a lot of this stuff right here is our discounted cash flow, discounted free cash flow model, which I take the most weight into with my valuation analyzer. That weighs heaviest. And we have a intrinsic value or fair value of $699 per share with growth rates slowing down to 7% over the next 10 years, trickling down. So we have about a 16% margin of safety, and we wouldn't start trimming until about $769 at 10% increments. So as you can see, we have about almost basically 12% return on investment over the next 10 years. Highly demolishing the market because it gets 8 to 9% per year returns, and then 14% over the next 5 years if you didn't even hold it for the whole 10 years. Furthermore, you have a current P of 25, you have a forward P of 23, you have a above 3 on your free cash flow yield and your forward free cash flow yield, and your PEG isn't there, but that's because they don't have explosive explosive EPS growth. I'm okay with that. I'm good. They're growing like crazy. They literally have half the world's population using their platforms. Um, they're getting into, you know, AI glasses and all this craziness. I feel like they had their Apple moment with their big reveal of their glasses. So, yeah, I mean, fundamentally and technically, this company is a buy. If you want to trade it, if you want to buy it for the long term, I wouldn't say you're making a bad decision. I'll say that. Not financial advice, but I definitely would not say you were making a bad decision if you came to me as a friend and said, "Hey, I want to buy this company." I think that's a great idea. So, appreciate it, guys. And this is a little longer one, but we went over a lot of other stuff and look back at history. And, I feel like that really teaches you guys more of like how to be looking at these things, looking back at history and comparing it, right? If I just sit here and say, yeah, the Williams are, this is your support. And then if we break that, blah, 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 like, why though? Why is the reason, right? I could sit here and say, the sky is pink, and some people might believe me, but we have to like, why? Why am I saying the sky is pink versus somebody else saying the sky is blue? Well, maybe where I am, there's northern lights or something crazy, right? Like, but I have to explain that. Same thing with the charts. You guys will never understand my strategy. You guys will never understand my mentality and how I'm thinking about these trades unless you understand how I'm thinking, unless we look back at history, unless we, break these things down, right? So let me know in the comments what you thought about this video. It's a little bit longer, but I feel like it was lots of gems in here and lots of good information. Um, I'm holding this name in my long-term portfolio. I'm going to start looking into some options. Like I said, probably about 50% of my position in options higher here, and then add 50% more of my position to the trade of options if we do break down here and get here. So I won't be playing this on a share standpoint. I'll be playing this on an option standpoint. But this is a more expensive name, so options are a lot more expensive. So if your bankroll, let's call it, your trading portfolio isn't there for options on these, then I would play this on a share standpoint. But yeah, I appreciate you guys hanging out this long, and let me know in the comments below what you think about Meta. I'll see you in the next one.